The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. Almost towards the end of the week here. It's Thursday night here in the Philippines. Hope you guys are doing well. Let's take a look at the 10-year immediately. Talked about this kind of being a little bit in no man's land here. We got some inflection points just to get right into it. And we are going to do some reboots on our Amazon servers after the first break. So bear with me a little bit. We're looking a little sticky here from this connection. So 129.24 unfair highs on the daily. This is our daily situation. Obviously, those previous unfair highs held on the previous box, but we talked yesterday about it's just not a lot of leverage here right now, and I'm not a big fan of shorting this product. So as we look into this, and I'm gonna have to talk a little bit more often, which may not be a great thing as we kind of snap through these charts and see if I can get these to react properly. Here we go. Taking a look at the weekly, we still got those targets ultimately above at 130.20 on the 10-year, and on the 240s. Yesterday we were just kind of sitting in the middle of these things too. So, just kind of turning around. It's almost like we're waiting for another piece of news for these to lift higher. Again, I'm just giving you kind of seemingly what it feels like here, and again, not a big fan of shorting treasuries, as you know. So, as we take a look at the 30-year, and the reason I'm going to these is obviously some of the talk lately affects some of the treasuries on down the yield curve. The 30-year obviously reacts a little bit more violently than the 10-year. But let's just take a look at what's going on with the 30-year, because I wanted to compare these two. Come on, charts. Come on, guys. Okay, here we go. So, we're starting to gravitate above a fair auction on the dailies on the 30-year. So I'm, looking at a close again above here. And I know we kind of did this the other day, but this type of consolidation, kind of compression, churning type of action is more of a continuation pattern, if nothing else. And I'm looking at this level that we looked at as targets before now as somewhat support on this around 165. The previous unfair highs were 164.24, and we talked about that and how we kind of had staged above there, then failed. That's what stops are for. But in my opinion, you got to keep turning the rents the same way, and that same way has been long since we started, getting this turnaround down below on the 30-year, and then breaching these profiles, and then catching these support areas for the most part, never really getting below the fair auction or the balanced area, so to speak, on the 30-year. So that's kind of the way I'm looking at this. And by the way, we're going to kind of run through some of the usual suspect scenarios, and we're going to bring Juan Villegas on in the next segment and some of the rest of the show, because we're going to talk about some foundational work on automated systems and some of the things that he's got working right now, which are just, kudos, hats off to him. Somewhat shorter term things that I actually do, but he's using some combinations of some Renko bars and some other things along with our profile information that is just knocking the skin off the ball lately. And Juan's actually hopefully coming over here in the Hong Kong area about the same time everybody else is in the next 2 weeks. So, we got a lot of work to do when he gets here. Here's the situation on the euro. We talked about ultimate targets down below 107.02. We're still standing by that and using the 240s to regulate the trade. You do have, and again, here's the daily here if you can see that. But let's take a look at the 240. Got a new profile that's kind of possibly attempting to appear here. It's kind of almost like a wait and see. We don't have a lot of leverage to short this right now, but I hope we get some profile lows actually that appear. Just kind of let this thing stage down, and then I'd feel much better about the continuation down into 107.02 and possibly even lower. And why do I say even lower? Because the same picture still holds here. This is our weekly. and we had that DMZ that we touched into to kind of get leverage off that 110 and some change, or 110 and some change area. This is our weekly. We had that box appear above price action. That's, as you watch this show, that's pretty bearish. And I'm just, still got targets at, par status on the euro versus the dollar. And I know a lot of people are still in that camp, and that's scary in itself to have everybody kind of thinking the same way. But I think that's unavoidable. And we had a little bit of a scare lately, getting back up into that 110 area. I was hoping we'd actually get up into 112, but that's the way trading goes. That's the way charts go. They don't move in a straight line. So always be prepared for rallies, even if you think the thing's going much lower. Be prepared. Let's take a look at the yen really quick while we're talking about currencies. Looking at the yen, and again, the Asian markets have just been on fire. Joey Jung has just been spot on correct about that. It's been a little disturbing that we haven't been able to get through this 120.34 and on our weeklies through that line also, but I'm still a fan of not shorting the yen and trying to play that devaluation game along with some government intervention on our side of the coin there. And here's our weekly situation on the yen. Initial targets 120.95 and even higher on this. I love the way this is acting, and we talked recently about putting some longer-term stops below this 117.74 area. I'm still standing by that. I still think this is a great opportunity. Maybe trade a little bit lighter, loosen up your stops a little bit, not to get shaken out. And shorter-term traders, you've obviously got on the yen some really good information here on the 240s to also be aware of. And all these are within the scanner. And by the way, we're splitting up. We've got a desktop version of that scanner. I'm going to be talking to Tom about that. We've actually got the paragraphs in, which we finished, but it has been making the web scanner that any of you guys have access to or demoed a little bit sticky. So we're going to just put that into our desktop version. I'm going to talk to Tom about rolling that out to you guys today because it's a great thing for TFNN users to have. And you can have access to both of them as far as I'm concerned. So it's kind of something we want to be able to get you all the attributes that we've been working on. Here's the S&Ps. We had Eddie on yesterday about the ruble. I know, there's a small percentage of people out there trading the USD ruble. So we're not going to beat that one to death. But the S&Ps, we're still churning above those unfair highs around 2068, 2070. And I'm trying to wait for a breakdown and a close below this area. I haven't been as rosy long on this product. We've got our indicators as far as breadth going, just kind of hanging in there slightly, not a big push forward on this at all, if you can see this. And we got a little bit of dissertation. This is kind of some of the things that I wanted you guys to have access to on the desktop scanner, which kind of tells the story for you. And gives you the inflection points and kind of gives a little bit of a dissertation on what might be possible to do using the breadth and using the inflection points on the underlying futures. And as you can see, the breadth on the S&Ps is hanging in there barely on the daily. And here's the NASDAQ situation, still negative there. This is why I'm just not seeing these things congruent right now, and I'm not that excited about getting on the long bandwagon above these 2068, 2070 areas. So that's my take on the S&Ps right now. Just kind of, got to wait and see if we can come back down to the ground level here below the 2068 areas. If we miss a ride up, that's just the way it goes. Don't feel like the leverage is there. Let's take a look at the dollar. This is something that really kind of climbed away from. I was hoping for another buy point down here, as you guys know, around this 95.5 area on our weeklies. That didn't happen. We kind of raced up. I just kind of missed that. And we're coming up into some short or intermediate targets here. If I can get this thing to Michael, we're going to definitely have to do that on the break. We've come in here today just to give some points here. 98.70 been as high as that. The unfair highs are 98.75. I'm going to call that satisfied. We backed off a little bit, as you can see. Those were predetermined targets, and I'm not averse to shorting this right now. And keeping stops above that area. I still think we could go back down and revisit some lower areas on the dollar. So that's kind of the way I'm looking at that. Just to give some NASDAQ numbers really quick before we go to break, and then we're going to be speaking with Juan directly afterwards. As we look at the NASDAQ, breadth, intermediate terms, again, we kind of showed this before, negative. And as we look at this, pop up our chart here. We've gotten above profile, so I'm just kind of patiently waiting at this stage to see if we can get back down and breach 43, 44, 45. We talked about that yesterday. Just again, not a big fan of going long the U.S. indices right now. I want to go quickly into – my charts are slow. I hate it. We're going to go quickly. I got actually an email about this because some people had kind of started these plays. And, we talked about 28,000 up there. Here's – the Hang Seng, the Shanghai have just blown a gasket. Trading 27,464 right now. This daily is not updated on eSignal. I don't know why. Oh, there we go. It's updated now. 27,460. Joey was the harbinger of the north move here as he was on the other day. And if you can see that, that's just been an incredible, I don't think that bar's right there, but I know this bar's right. He had asked, the guy wrote me an email and asked about, what do you do with this thing now that the move kind of happened? And do you hang on to this? Do you wait for higher numbers around 28,000? I think you got to scale out of some of the position on a move like that, a parabolic move. Things that go up that fast can come down that fast, but here's a 240 situation. This is the Hang Seng. And we're just going to go into the Shanghai really quick just to reference both of these. I'm just going to go into the index itself. This isn't anything related to a future. Current price 39.57, and here's the daily. No new profiles up here, but we talked about having to chase this if it didn't come back, and that's kind of what's in order here. But I think, we could probably have a new profile appearing pretty soon, so it might not be a bad thing to take some off the table when it comes to these Asian indices if you've been trading them, or some of the ETFs related to those Asian indices. Kind of 15 seconds before the break, we're just going to kind of cruise through gold here really quick. And we're going to be able to talk about this a little bit deeper when we come back from break in about 5 seconds, or excuse me, in about 5 minutes. And guys, hang in there. We're going to have Juan on, and I think you're thoroughly going to enjoy that.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I'm getting out of it. Okay. All right, guys, we're back. And I think we've got Juan Villegas on the phone with us. Juan, are you there?
Yes, I'm here.
Great, man. You sound great today. Sounds like you're right next door.
Where are
Absolutely.
you?
Are you on the next island over here? Where are you at right now?
No. I wish I was there.
Well, hopefully you're going to be here in the next 2 weeks. We're trying to coordinate.
I know.
That's going to be a joyous occasion to me. I'm telling you, to see you. Ben's going to be here from South Africa. Eddie's coming in from Spain, and Joey obviously his home base is there. And I'm really wanting to ride on this big. I think I can call it a yacht that Joey's going to get us out on in the Hong Kong Bay there when you get here. So
okay, that sounds great.
Yeah. Hey, Juan, we're kind of rebooting some charts right now in an Amazon server, but before we kind of get charts back up, Eddie and I are just completely ecstatic about seeing you, but we're also super excited about combining some efforts and, running some money with some of the strategies that you've actually been, automated strategies, that is, that you've been putting together and putting those to work collectively. And what I thought would be a really cool thing is for our users today, or the people on the TFNN network, to kind of listen to Methuselah, I'll call you, because you've been doing this for a while, and just get the general concept of how a strategy is even conceived of, put together, and maybe some of the components that you're using. So if you could discuss a little bit about that, I think our listeners would just get a kick out of that.
Well, yeah, absolutely. When we develop algorithms, and that's a fancy word, everybody thinks that in algorithm you have to have a PhD in math and physics and all that, even though we have a guy who has all these credentials. An algorithm is just a logic decision tree. Is basically that's what it is, and it's based on your knowledge of the market, your experience, your back testing, and your strategies. At the end, what we have done with this algos is just creating what we just create is our trading plan in an algorithm. That's it. So, for instance, one of my favorite setups is from old school classical chartism, is the first higher low after a sell-off. That's one of my favorite setups. So what we've done is that we have coded that first higher low using task tools and asking the boxes who's controlling the auction. Is it buyer's auction? Is it seller's auction? And then once you find the higher low, you just have to look to your left and see if you have void, if you have a valley or a hole in the profile, and that's it. So our approach has been pretty much hands-on, based on our trading methodology and our results and our trading logs. What's working? What's not working? And fix it on a weekly basis. Adjust some of the setups, the size of, and even changing bars. We have been experiencing with time frames, the 15-minute chart, the 30-minute chart, the 60-minute chart, the hourly, the weekly, the daily. But we came up with this idea once, and that's thanks to the relationship with Bloomberg. When we met Cynthia Case, we started playing with range bars.
Right.
And range bars is, for instance, if you're trading gold, you can have a $5 range bars, meaning that the charge is going to be every single bar is going to be a $5 bar. That will eliminate a lot of the noise that a time frame bar has, and that has helped a lot. And now we're playing with Renko bars. That's another huge thing that we have found, that the Renko bars really harmonizes data in a way that I haven't seen them, doing. Time frame bars cannot do that. So,
right.
So it's a continuous process. It's Kaizen, is continuous improvement of the process of trading logs. You have to be very, very. You have to, details, records, charts, every single trade. What is the best time to trade this with this algorithm? For instance, we have found out that Wednesdays, when you have the oil report, the inventory report for oil, is huge to trade with this algorithm. You can just trade Wednesdays and that's it.
I tell you what, can you hang around, because we've got to go to break, and in another 5 minutes, I want to get into some other levels of automation with you, if that's...
Absolutely.
Okay, great, Juan, great. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got Juan Villegas with us today, and we've been discussing some formations of automated trading. Juan, are you still with us?
Yes, I'm here.
Great. Yeah, where you'd left off, you were talking about combining some, Renko and range bars and things like that. But can we back up just a little bit and kind of revisit some of the things you said earlier? A lot of people out there, a lot of these platforms now, you've got access on TradeStation, and you're kind of the TradeStation guru. A lot of the things that you do, we both know you've TradeStation is a good product, and it's got a really nice backtesting capabilities with it. But when a lot of people will unfortunately use the optimization features of some of these platforms, and it can give you a false sense of security.
Oh yes.
And, yeah. We both know about that. And I think. Why don't you kind of just get into a little bit about that and how do you throw the spaghetti against the wall and really try to figure out if something really has validity, like at all? I mean, how do you start narrowing down things basically without the optimization tool, and what does that optimization do?
Well, one thing, John, is very important here is you can leave out of two setups in this business. Just two setups. You don't need to have 75 strategies, 100 strategies. You can leave out of two setups, just that. So what we've done is just automate those setups, and not do the. Of course, we've done some optimization with TradeStation and all that. And once you look at the equity curve, you get all pumped up that you have a winner strategy. But then we have walked through that route in the past. Now, what we're trying to do is what's working for us in the past years, 10, 15 years, is the same setup. Is the first higher low, is the first lower high, and with void to your left. You look at the map, and once you find a void, a hole in the map, that's where the price is going to be vertical. That's a key thing for our trading plan. So we've developed algorithms to find those holes. That's one of. If you want to be successful in this business, I'll give you just one setup. Find a hole in a profile. A hole is where you have two POCs, two yellow lines, two green lines in Bloomberg, and there's a hole, there's a low volume in that distribution, and that's where the market is going to go vertical. That's a must.
Very well said. Very well said. Keep talking. I'm loving your language here.
Yeah, no. So that's all. What you need to do is just find those holes and trade in the direction of the hole. That's the only thing you have to do. Now,
let me kind of display what you're just in a real quick sense what you're talking about. So, Juan's basically. I'm just going to go to gold for example here. Juan is basically saying in a nutshell that when we get outside of these balanced areas, these are when more high probability trading opportunities really lie for, and these are holes. And I'm not going back in time to show a true hole here, but to identify these things in an automated way, you'd be able to basically, I think, increase your risk reward scenarios. Go ahead. Sorry, Juan.
Can you have the market map there in the chart?
Yeah, let me.
Anyway, but the thing is that watch out with automating everything and optimizing everything, because back testing is one thing, but the real test is the forward testing with real money. Nobody's going to believe you if you want to be a portfolio manager or a fund manager. Nobody's going to believe you based on a back testing strategy, because those look perfect. Right. No, you have to work with forward testing, meaning you have to put real money and test your strategies and fix, do little corrections every week, because in this business, you will never finish an algorithm. It's a continuous process of improving that thing in order to get more performance. How do you measure the performance of an algorithm? Is basically the batting average, the profit factor. There's a ton of numbers, but we basically focus on two big numbers. The batting average, which is I can work with an algorithm that's 45% batting average. That's okay for me. But
why is that? Why is that the case? Why can you live with the 45% winning percentage?
Well, if I have a profit factor of 3.5, that thing will make money day in and out. Without question. The profit factor, how much money the algo makes when it wins compares when it loses. So it's 3.5. That means that every time it loses $1, it wins $3.5. So it's more like the venture capital mentality. For instance, one of those big venture capital funds can have a 10% batting average and be very, very successful, meaning 90% of the companies where that venture fund invests will go bust, but 10% will make money, and the profit factor will be 90, 80. For instance, Peter Thiel, who bought, he was the first backer of Facebook. He invested $500,000, and I guess his profit was 1.9 billion. So imagine the profit factor there. And he can lose in 20 companies and make money in 2. That's a 10% batting average. But the profit factor, how much money is going to make in those 2 that make money? So same thing. I'm not going to trade a system. Hold on. That's 10% accurate. No. But we found out is that 45%, 55%. I don't trust an 80% accuracy system at all. I don't think that's possible.
I'm with
somebody
you.
think-
I'm with you.
But
And a lot of those guys, I'll just say this. And we're looking at a pretty good hole on crude oil right now. I'm showing it on the chart.
I'm
Just to kind
short.
of
I'm short oil.
yeah. We've talked about targets
Since
above on this
yesterday.
one. Yeah, 53.67 was our target, and then we kind of had to like rethink things up in there from going long. But what you said right then, you know, if you guys are perusing the internet and you looking for automated systems, and there's you know C2, there's Strategy Runner used to have a zillion up there. We were actually Juan and I were the top 3 strategies. Oh, excuse me. 3 of the top 10 strategies on Strategy Runner for 2 or 3 years running. And when you go into those scenarios and look at people's track records or hypothetical track records or whatever, when you start seeing, like Juan said, the 80% winning percentage, you don't probably need to walk away. You probably need to run away from something like that, because those are really not, that's not, you know, being right 80% of the time in the trading world
It's almost impossible.
it's not realistic. And anybody who's claiming that they're right 80% of the time is, and that, again, that really lends credence to put the stops in, because that's the way trading goes. You get stopped out, you know, you turn the wrench the same way, and nobody's right 80% of the time or higher. So I'm sorry, Juan, continue. I just wanted to elaborate a little bit on that.
Yeah. So it's, again, it's very simple. You just automate 2 or 3 of your best strategies that you have worked out, you know, with them in the past and have shown in your trading records that they're accurate. And then start evaluating day of the week that strategy works, you know, much better. For instance, as I mentioned before, with crude oil, Wednesdays is a great day because it's inventory day. And so you turn on your algorithm on Wednesdays, and they will work for you for the whole week. So,
Right.
what the other thing? Hour of the day. What's the best hour? What's the best performing hour of your algorithm? And then start looking for, you know, you will turn on the algorithm between 9:30 and 12. That's it.
Right.
Or-
so there's so many things, you know, over the course of the years and, you know, months and days that you've been able to realize are just riper opportunities to be in the market. And that's kind of what you're talking about now, is just drilling down into what, you know, as a trader, we always talk about, you and I, it's like, how do we compress our time frames into where we're actually getting the most out of our time in the market? And that's kind of what you're doing right now, is saying, you know what, the best use of my time in the market, and trying to get rid of the choppy situations and waste of time, is to really identify what time of the day you should be trading. And I really I respect what you're saying. There's a huge component of some of the things that you've been doing lately. Right. So, but you know, a lot of something you said earlier really kind of rung a bell with me, is you kind of lended credence towards keeping it simple. Don't try to complicate the strategy to the
Absolutely.
point. It's a never-ending endeavor. Trust me. I mean, you guys out there who have played around with, you know, and maybe even hiring a programmer and trying to put your ideas into automation, and trying to get away from the screen and just kind of letting your thoughts, which, you know, the strategy, you know, you should be doing what the strategy is doing, is basically, I'm assuming, what a lot of people out there have tried to boil it down into. But the more that, you know, you've seen the stuff that we've done. We got like a zillion filters and exits going on. But when we got into the breadth situation, personally, you know, you and I, and we started looking at those systems on a little bit more kind of relaxed intermediate scale,
Right.
we basically threw all the other filters out the window, you know, because all
yes.
they did was kind of clutter the space and didn't give the purity of the concept. And what was really cool about that one, we found out, is that taking those strategies and playing around with decimal points doesn't really affect it, which really identifies that as a true concept to be, you know, the foundation of the strategy on. And I know that that's what kind of, you know, you've been doing a lot of this exploration lately with what you've been doing. And how often does this, like some of the I know that you talked about multiple time frames, but in your mind, what, you know, what's the ultimate, you know, amount of transactions on a daily or weekly basis, monthly basis that you figured out is maybe the ripe opportunity as far as revolutions go? What are you thinking on those levels?
That's a tough question, but on average, our system is very slow trading, is 2-3 trades per day. That's it. But if you're going nuts, if you want to go crazy, there's the high frequency trading stuff that's, thousands of trades a day. So there's not a correct answer for that, because you can have a high frequency trading algorithm that trades 20,000 times a day and it's killing it, and it has a 40% average 2.5 profit factor is huge. That depends on the numbers. Is all depend on the numbers. So we are very, very careful on measuring where those numbers are appearing. If you have outliers, why they're appearing, and try to fix those things that do not resonate with the strategy. By that I mean that when you look at what the algorithm is doing, because you have to, after the algorithm close the trade, you have to evaluate, is this thing doing what it's supposed to do? And then fix that. So the amount of trading is not a thing that I consider is a way to define if it's working well or not. For me, is more, again, what time of the day is it making more money? What day of the week? What type of setup is working much better? And as I told you, for instance, my preferred setup is the first higher low after a sell-off in a rally, because we're in a rally now. So I buy every dip that the market is having, and that's it.
Right. That question I asked you about, what's the ultimate amount of revolutions? That again depends on your commission structure. Depends on, a lot of things. But there's also something to be said about trading too little, and that means that your sample set, your data sample set, it has to be a certain amount when you're back testing on. So for instance, you can't, from 2003 to 2015, you can't really gauge a system that traded 13 times and say that, oh my God, this thing made a lot of money. And so you got to have a data set that really you can rely on, because when you get into statistics 101, the validity of the information really is to some degree reliant on the amount of sample that's available, and is that a valid sample to use. So that's one of the things we look at. I mean, if a system's trading too slow and we get great results, sometimes you kind of have to look at that with a little bit of a jaded eye. Want to tell you what, man, it's been great having you on. We're going to go to break again, and I'm sure I'm going to be talking to you after the show as always. And thank you so much for coming on.
No, thank you.
Awesome, man. Guys, we will come back and close the show after this next break. We'll be on for 5 more minutes. Hang in there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome to the show or back to the show, and thanks for Juan coming on and discussing some of the genesis thought patterns of strategy formation. I mean, it's there's different ways to attack that, but we've been around the block a little bit, and getting starting with optimizing something is probably not the way to go. And we've kind of stayed with the core concepts of how we manually trade, put those simple concepps, not too many, but simple concepts into a mousetrap, do some back testing, and then start tweaking from that point forward. Again, it's a never-ending endeavor, and Juan's done some great work lately, and I hope we can start putting that to action a little bit heavier with some heavier sums of money. Here's crude oil, the weekly. We talked about getting into this area, and then just that's kind of it for a while. Doesn't look like we're going to have a weekly close outside of this kind of pinched in profile here on the long term. So that's kind of where crude oil is. We're kind of like bouncing around here now. Is it a short? Is it a long? Here's the daily on crude oil. Let's get this to pop up here. Very similar situation now to the weekly, just no leverage here, so it's kind of let somebody else kind of get in there and churn it out with crude oil now. I think we've had a pretty good run, and as we've looked at this, we've also, just to kind of go back into the XLE situation. Let's see if we can get this to pop up here. talked about this might, possibly being the easier thing to look at. And we also talked about yesterday, we got very close to that 80 area. We talked about targets also that, coincided with that crude oil move up. It's a nice little trade. Caught a handful of points here on the upside. Talked about not holding this until crude oil gets back to 70, 80, 100. I just don't think that's going to happen. So take what you can get when you're trading crude oil, and those are the ways of using our information. Let's take a look at the XLF. I gotta bring it up. Eddie and I were talking yesterday. This is, Eddie was talking screaming short. I'm not so sure about it being screaming short. I'm just, concerned that anybody who's playing this game with the XLF, just make sure you got your stops in. And again, we're talking about limiting downside. And if I can get this to pop up, we got a little bit of a DMZ between 24.28 and a little bit higher. A little bit higher is where I'm putting my stops, and just trying to stay on the short side of this as the market moves forward. And hopefully we'll get some help from the S&Ps. So we're going to go back to some of the, man, this thing is really clunked up this morning. Here we go. We're going to go back to the S&Ps, looking at what's going on here. We're just kind of drifting back a little bit lower, still staying above that daily profile. But remember the big numbers, if you caught the show late, 20, 68, 69, 70. We just got to get back down below there to confirm that we might have a shot of drifting lower. I'm not a big fan of going long this. And reason being is we got a little bit of a mixed bag on the NASDAQ breadth and the S&P breadth, and the S&P breadth is just kind of hanging on just barely as we wait for this to come up here. See the S&P intermediates like that, and the NASDAQ is actually intermediate negative right there, just barely. So we're just, not a lot of strong indications that this breakout is to be bought. And I'm sorry I keep saying that. It's just something I want to impress upon you right now. Guys, you've been great. Thanks for coming on. That was a true joy to listen to you. And Steve Rhodes is next, and we'll pick it back up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.